the PBOC has come out with a broad set of measures targeting really three areas, if you like, targeting the stock market, targeting the monetary side in terms of encouraging more lending, if you want, and then they've also targeted the property side, in particular on the demand side, and also cleaning up existing inventory. Now, I think it became pretty obvious to us and to lots of other people, just generally on the ground in China. The second quarter, there was a significant deterioration in consumer sentiment, and the amount of down trading in different consumer categories. We've had month-on-month declines in property prices in China now since September 2021, and it was really starting to hit the consumer in terms of sentiment. And so I think after the second quarter, it became also obvious that they're going to miss their 5% growth target, and they've needed to respond, and that's where we're at. So on the monetary side, right, the first thing we had was a 50 basis point reserve rate requirement cut, which is basically, as you know, Chinese banks, every time they receive money on the savings side, they're required to put a certain amount away that they can't lend. And that rate was cut by 50 basis points. So it's fairly significant, particularly for the big banks. The second thing was they cut 50 basis points on the existing mortgages. So, effectively people can refinance down by about 50 basis points. So obviously that benefits existing homeowners in China in terms of saving on their mortgage payments. They also, on the monetary side, they cut 7-day reverse repo rate by 20 basis points. And now when you look at that, my comment would be, we haven't been short really on money in China. It's been the willingness to lend the money. So a reserve rate requirement cut of 50 basis points, albeit significant, frees up liquidity for the banks to lend. There hasn't been a problem of lending. It's been a problem of people demanding loans. So that would be my first point. The existing mortgage rate cut, definitely goes straight to the household. 150 billion yuan saving there, and then the reverse repo cut basically just frees up a little bit more liquidity in the interbank market, and effectively just frees up more short-term liquidity between the banks in that market. And the first one was, a 500 billion yuan facility for financial institutions. The proceeds to be used for stock markets only, but a very open attitude to more in the future. So that was really directly targeting all types of financial institutions, whether that be life insurance, brokers, etc., to look to help the sentiment in the local stock market. The other thing was a $300 billion lending facility to allow for buybacks. So the PBOC will lend banks at 1.75%, which they can then on forward to companies and major shareholders to increase share buybacks. So it's really a facility through the PBOC to companies and major shareholders at a very cheap interest rate to allow them to buy back, very cheap stock. And we know that the stock market in China is very cheap. And there was a third one, and that was sort of upcoming new measures, they announced to encourage mergers and acquisitions by the CSRC. So, the stock market side of things, again, it's a very clear signal. We want you to buy back your stock. Financial institutions, particularly ones, I think, with equity or equity exposure, life insurance companies, brokers, a facility there to help them participate in the stock market more directly at such a cheap level. The first one is, dropping existing down payments on second homes from 25% to 15%. That has been coming down in lots of cities over a long period of time. So I would call that an incremental step. It's still one that's reasonably significant from 25 to 15. The big one for me is this encouragement through the lending facility, $500 billion of allowing SOEs and the local government to go back and buy excess inventory that exists in the primary market at the moment. And that facility was going to be funded by the PBOC up to 60% previously. Now the PBOC is saying we'll give you 100% to go and clean up this inventory. Now we can argue on the amount. $500 billion, is it enough? We'll have to wait and see. But if it's not enough, it would seem to me that they're now more determined than ever, and they're not happy with the overall growth situation in China, and they'll do more if necessary. So I think I think for me, that's more the important thing rather than the amount. Financials had a good day because the measures announced, reserve rate requirement cuts, also, the existing mortgage rates coming down, but also guiding deposit rates down to cover the funding gap so banks aren't left on the squeeze. I mean, the banks themselves did okay. Stock market boosting measures do help, life insurance, they do help brokers. So those sectors perform particularly strongly. And then, at the edges, there was lots of stuff in there for the consumer as well, with existing mortgage rates cuts. So there's going to be saving on people's mortgage payments on a week in, week out basis. There's obviously going to help, consumption power of the Chinese consumer. So, financials, consumer discretionary were really probably the big winners, I would say. I think going forward, I also believe that Chinese equities, despite all the negativity that was out there, should never have been priced this cheaply anyway. So you can sort of believe what you want to believe in terms of the Chinese economy, but growth was very subpar. Policy setting was too aggressive on property. But the price of the stocks, despite all that, had become extreme in terms of the negativity priced in. So my point is that we just need to see some improvement. I don't think you need to see drastic improvement, but some signs of a turnaround. And I think that may be enough for the Chinese stock market to do quite well. And I think a lot of these measures put in place give us that chance. But I do want to emphasise, how cheap the stock market is. Again, quality adjusted, it's cheaper than the financial crisis in terms of the type of company you can buy and also the valuation, that you're buying it on. So, I also want to point that out to people, exactly how cheap this market is.